Hi everyone, and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather, and today I'm going to be covering the FTSE 100 futures. FTSE Futures Yearly Chart. So price action is the same on all time frames. We say price action is fractal. So you can practice your reading of the 5-minute chart, the same as you have your reading of the yearly chart. Here we've had a double top, we broke above, and so there's probably a broader measured move far above where we are. One of the problems the FTSE has had is that it took a long time to convince traders that we needed to go above 7,000 and then that we needed to go above 8,000. This pullback was very big, and that's a warning to traders not to buy high. It actually took an inside bar with some follow through and then finally a third bull bar before traders were willing to buy the close strongly and buy above. Now that there are two bull closes, assuming that the last month of the year closes as a bull bar, I think it will. I also think it's going to close above 8,000. You can see if a bear sold above the high of that bar, betting that the market was going to go lower back to the moving average, now there's a bull breakout and they probably have a chance to get out of their original entry. You can see that was 7,900, high of last year being 8,000. When we go down to the lower time frame charts, these were great buy opportunities. Now you can see this is a strong bull breakout above a trading range. Anyone who was selling the highs of these bars in here is now very trapped, and all the highs of these bars in this trading range turned out to be a fantastic buying opportunity on FTSE. There were measured move targets up here. We were also in breakout mode here. I think a lot of bears were expecting a wedge and to go sideways, but I was not so bearish. Most traders know I like to trade high twos. This to me is a two-legged pullback to the moving average, and I'm looking for reasons to get long, not short. Here's a bull breakout bar above an inside bar. These were all signals that the market's probably going to go up and test the highs. All my strong FTSE trades this year came from this weekly market report I do every week. That's one of the advantages of putting together a report, is it helps your swing trading. I said when we saw this gap, that's probably going to give a measured move, and that anytime a bear bar appears here, it's probably going to find buyers. So now we're at a couple of measured move targets. Well, I've got the 00. We've got an outside pattern here, which is an expanding triangle on a lower time frame. There's a target down here, and there's a target up here. Well, sorry bears, I don't think we're going to get to this one unless you can do something to convince me in the next 2 months. But I suspect we're going to go and run the stops on anyone who was short in here, go sideways, and probably do this again, which is pull back to the moving average. You can see the moving average is now above the highs of this trading range. So now the bears have not only got to get through all the layers of support, but they've also got to get through the moving average in a bull channel. Now there's two sides to everything. What's the bear case here? Well, the bear case is no one wanted to buy above this bar or this bar or this bar. What are the chances traders are going to want to buy above this bar? If you're buying here, where's your stop? Maybe below here, maybe lower. I think anyone that's buying here is not going to use their full position size because you're buying in space. You're not buying a breakout trade. You're not buying a pullback to the moving average. It's probably a better short scalp, but because it's always in long and all the gaps are up and we're above both moving averages, I'm only looking to buy. I would not be surprised if we trade into this monthly bar and find buyers at 50% or even lower, so this channel can continue. So always in long, either long or flat, but I think we're in a tight trading range and traders will be looking to enter on the weekly or the daily chart. All right, so let's take a look at the weekly chart. What's the dominant feature of this chart? Well, an incredibly strong bull breakout with open gaps, and there's still body gaps below, just this little bit left. This is so much sideways, it's been more than 20 bars. I think the bullishness from this move has likely dissipated, and that's why it's more of a 50-50 environment. When we were looking at the measured move on the monthly chart, the price was 82 and 83, 84, and you can see 84, 83, 82 has been a very, very popular area for traders. This has been going on for so long now. The pull of this is going to make it difficult, I think, to break too strongly above, but also make it difficult to break too strongly below. Some traders might see counter trend wedge setups. So the bears see 4 bear bars in a row, and they're rightfully expecting a second leg sideways to down. They'd like it to go all the way down here, but I suspect it's more likely to go sideways. The bulls now have a very large gap on the weekly chart, and they're going to do everything they can to keep it open. If you are a bear, are you going to sell below that bull bar? You're going to sell above that bull bar or above the highs of these bear bars to scale in above. The bulls now have consecutive bull bars above the moving average. Can the bears argue they broke a swing point? Well, this has been the problem we've been talking about for a long time. The swing point, I think, was down here. So the bears were always going to struggle to take out that swing point, and then we'd end up just going sideways in a tight trading range, as no bears are willing to hold a swing to get all the way down here. They're just going to sell and take 1-to-1s and 2-to-1s, wait for this to form a final flag, probably get a bull breakout, and then start the process again of taking out lower highs. In the last couple of weeks, I said, even though there were consecutive bear bars, I was not expecting there to be a lot of sellers down here. And that's because all these gaps are open, the monthly chart is bullish, and that means this might just be a discount area for all those bulls. Some who have bought here, looking to scale in lower, knowing that this is a tight trading range and we probably need to get back there. We go down, we come back. We go up, we'll come back. But because we're above both moving averages, I always give an extra 5% to the bulls. It has been much easier to buy below a bull bar, any of the bull bars in here, and it was basically impossible to lose money if you had your stop in the right spot. The bears can argue selling above any of these bear bars were also great trades. And that makes me think now that we're above more bear bars, the bears are going to keep doing that. I think we're going to go sideways to up here. If I was a bull, I would not like to be buying against 4 bear bars. I think next week's going to be a bear bar, or at least have a lower tail, which might be the second leg of this move. One other point on the weekly chart, I have this monthly high 1. That means if you bought above the highest bull bar in a bull trend, when we're always in long, these are stuck bulls. Now, I believe that they will get a chance to get out of that trade. And for the past 13 weeks, I've been saying exactly the same thing. This is a high 1. That means it was a reasonable buy signal in a bull trend. If you do something reasonable and you have your stop at the correct place, there should be a chance to get back out, break even, or buy lower and make a profit on your lower entry. This was fun to mark up on the chart, because this is the longest time I've had to test that theory. And at the moment, I still think we're going to go and let those traders out. Let's just have a quick look on the daily chart. The bears had a couple of strong legs down here. 8,000 was the magnet, so I was expecting it to be a layer of support. Very strong bull bars going into last week, and so there's a high expectation for this to have a second leg. This is a spike. It's more likely to have a spike and channel and go sideways to up, and that any bear moves into this range are probably going to get bought. There are likely bears who sold above this bear spike and even higher, and they probably won't lose money. That means we'll probably overlap these prices on our way to move up. One of the problems the bulls have on this chart is a total absence of anyone wanting to buy above 8,300. Why 8,300? It's a couple of hundred points from the 200 moving average. It's a couple of hundred points from the all-time high. That makes it a really good entry point. Traders can buy and buy lower. Betting will come back to the moving average. They can also sell and scale in higher. Betting this is a tight trading range and will also get out of that second position. And so far, everyone's been making money doing that. We go above the moving average, you sell and sell higher above a bear bar. You go below the moving average, you buy below a bull bar and scale in lower. And so far, they've all made money. It makes trading look really easy. At some point, one side's going to lose. Now that the bulls have consecutive large bull bars closing on their highs, with a huge open gap, makes me think that we need to go a little bit higher, 8,400, depending on where the middle of that measuring gap is. I don't think there are any bears who want to sell in here. If I was going to be short, I'd sell all the way up here, betting this is the top of the sell climax and a bear spike. And we're probably going to overlap this point. So always in long, expecting sideways to up next week. Well, thank you very much for watching. I hope you found that valuable. If you've got any further questions, please feel free to put them in the comments below. For those of you on the Brooks Price Action Discord, you can also reach me on there under Tim F. If you're in the Brooks Price Action trading room, you'll be able to catch me live trading tomorrow night, which is a free day. Otherwise, please tune into my channel. I'll be posting new videos through the week. Have a great trading week, and I'll see you next weekend.